guys, welcome to our video. Before we start our video, let me introduce myself. My name is Wardah Fahira and my friend beside me is...
Hi guys, my name is Nomi Romondang Panjaitan. So today we have 4 points to explain. The first point is about the calculation of the output tax minus the input tax, and the second point is about the calculation without the output tax minus the input tax.
The third point is about the calculation of value-added tax with the net income norms, and the last point is about the deadline of value-added tax payment. Without further ado, let's get into the video.
Okay, first is output tax. How to calculate output tax? The formula of output tax is rates multiplied by tax base. How much is the rate? The rates are 10%. And what is tax base? Tax base is the basis for the imposition of taxes, can be in the form of selling price, replacement, or export value. Before being multiplied by the rate, the tax base is the price or value that does not include VAT. Next, we will discuss the example of output tax. As you can see here, an entrepreneur sells 20 laptops at a unit price of 5 million rupiah. The price for one laptop is 5 million rupiah. For 20 laptops is 20 multiplied by 5 million equal to 100 million rupiah. And 100 million rupiah multiplied by 10%, that is the VAT rate, equal to 10 million rupiah. This 10 million rupiah is the output tax. Second is input tax. How to calculate input tax? The formula of input tax is rates multiplied by tax base. The rates are 10% and tax base is the basis for the imposition of taxes, can be in the form of import value, purchase price, or the same as the selling price for the seller, replacement value, or other values. Next is the example of input tax. Taxable entrepreneur X delivers the taxable goods to taxable entrepreneur Y at a selling price of 210 million rupiah. Output tax for taxable entrepreneur X is 10% multiplied by 210 million rupiah equal to 21 million rupiah. Input tax for taxable entrepreneur Y is 10% multiplied by 210 million rupiah equal to 21 million rupiah. VAT of 21 million rupiah is input tax for buyers or taxable entrepreneur Y, and output tax for sellers or taxable entrepreneur X. And the third is less or more VAT paid. The VAT that must be paid to the state treasury is calculated using the indirect subtraction method, cash method, or invoice method. This means that the VAT collected by the sales taxable entrepreneurs does not automatically have to be paid to the state treasury. The VAT that must be paid to the state treasury is the VAT collected by taxable entrepreneurs at the time of submitting the taxable goods or taxable services, referred to as output VAT, minus the VAT that has been paid by taxable entrepreneurs at the time of obtaining the taxable goods or taxable services, referred to as input VAT. Article 9 of the VAT law states that the input tax during a tax period is credited with the output tax in the same tax period, accompanied by evidence in the form of a tax invoice. Such VAT collection is called the input tax crediting mechanism, which is formulated as follows. VAT less or more paid up equal to output tax minus input tax. If output tax more than input tax, the difference is called underpaid VAT. If the output tax less than input tax, the difference is called VAT overpaid. If output tax equal to input tax, it is called nil. Example 1. In May 2015, taxable businessman Ananda delivered taxable goods worth 210 million rupiah. In the same month, purchased taxable goods worth 150 million rupiah. For the purchase, a tax invoice that qualifies as a creditable tax invoice is obtained. So first, we have to know how much is the output tax and how much is the input tax. Output tax equal to 10% multiplied by 210 million rupiah equal to 21 million rupiah. And input tax is 10% multiplied by 150 million rupiah equal to 15 million rupiah. VAT underpaid is 21 million rupiah minus 15 million rupiah equal to 6 million rupiah. The VAT deficiency must be paid by taxable entrepreneur Ananda to the State Treasury no later than the end of June 2015 before the submission of the VAT period SPT. Example 2. In June 2015, taxable businessman Ananda delivered taxable goods worth 200 million rupiah. In the same month, purchased taxable goods worth 250 million rupiah. For the purchase, a tax invoice that qualifies as a creditable tax invoice is obtained. So, the output tax is 10% multiplied by 200 million rupiah equal to 20 million rupiah. And the input tax is 10% multiplied by 250 million rupiah equal to 25 million rupiah. VAT overpaid is 20 million rupiah minus 25 million rupiah equal to 5 million rupiah. The VAT excess is compensated in the July 2015 tax period, or a refund request is submitted at the end of the year.
Now we're going to learn the calculation of value-added tax with net income norms. First of all, we have to know what is the function of norms. Why do we need norms? Basically, the purpose of norm making is simplification. So in this case, we use norms to simplify the calculations of net income. Then, what is net income calculation norms? Net income calculation norms is the guidelines that have been determined by DJP, which can be used by the taxpayer to calculate the amount of net income in one tax period as the basis for calculating the payable income tax.
Who can use this norm? There are several conditions to use this norm. First, it must be individual taxpayers. Second, gross profit less than 4.8 billion rupiah per year. And last but not least, taxpayers must notify the use of norms to the tax office for the first 3 months of the tax period.
The amount of the net income calculation norm is not the same. The amount of norm is determined based on a certain percentage and grouped by specific region. Percentage of NPPN grouped by region as follows. First, the 10 provincial capitals, which are Medan, Palembang, Jakarta, Bandung, Semarang, Surabaya, Denpasar, Manado, Makassar, and Pontianak. Second, other provincial capitals. And last but not least, other areas. For the further information, you can download the data on Direktorat Jenderal Pajak website. Then, how to calculate using this norm? Let's see this case. Charlie works as an outside insurance officer in Medan. During 2017, he has a monthly income of 4 million rupiah. How is the calculation of income tax Charlie for the 2017 tax year? Charlie's total income for a year is 4 million rupiah multiplied by 12 equal to 48 million rupiah per year. Based on the data on Direktorat Jenderal Pajak website related to this norm, it is stated that the norm for non-insurance officer is 50%. So, in Charlie's annual tax return, the total annual income is multiplied by 50%. So, 48 million rupiah multiplied by 50% equal to 24 million rupiah. This amount represents Charlie's total net income during 2017.
Now we're going to learn about the deadline for value-added tax payment. First, value-added tax and PPNBM. The deadline for payment is the end of following month after the tax period ends and before the value-added tax return is submitted. And the deadline for reporting is the end of following month after the tax period ends. Second, VAT on self-building activities. Deadline for payment is the 15th day of the following month after the tax period ends, while the deadline for reporting is the end of the following month after the tax period ends. Third, VAT on the use of intangible BKP and/or JKP from outside the custom area. Deadline for payment is the 15th day of the following month after the time the tax was due, while the deadline for reporting is the end of the following month after the tax period ends. Fourth, VAT and PPNBM Treasury Collection. The deadline for payment is the 7th day of the following month, while the deadline for reporting is the end of the following month after the tax period ends. Fifth, value-added tax and/or PPNBM collection by the official signing the payment order as a VAT collector. The deadline for payment must be deposited on the same day as the payment to PKP government partners through KPPN. And there's no deadline for reporting. And last but not least, VAT and PPNBM collection other than treasurer. The deadline for payment is the 15th day of the following month after the tax period ends, while the deadline for reporting is the end of following month after the tax period ends.
That's all our video. Sorry for our mistake. Thank you guys for watching.